Wellspring and Bill Baruch joining us, president at Blue Line Capital. Bill, let's talk some WTI first. I always like to get your take on multiple parts of the market, but it's a little sluggish here in crude. Or am I editorializing? Is this a good bounce we got going on here?
You're editorializing, and I'm being facetious, but this has been a really, really big move here over the last two trading days, and these markets are just digesting the move. I mean, overall, you got to think about the dynamics underneath: supply, demand, not just on a fundamental basis. I mean, I'm talking about technical supply, demand. And look at the equity market. Look at crude oil right now. You have these rips higher. The markets need to catch their breath. They need to digest, and the market profile sort of starts to refresh a little bit. And I think we'll see some continuation after today. But it's not a coincidence that we see crude oil up to this, what we put out in our research each day, major 3-star resistance at $73. It's a level that we said that when this thing rips, it's going to go to $73. And then ironically got the S&P at $46.99, which is the close before Thanksgiving in that overnight fallout on Friday.
Okay. So, Bill, looking at it next to stocks, I guess the point I would make is that we're like reclaiming lost ground quickly in equities, but we also didn't lose as much ground. Is this just crude being kind of the crude contract many traders know as being volatile, it swings, speculative contract, or is there potentially damage being done here to some of that supply story for crude, as they did talk about leaving reserves? We got a lot of stuff mixed up in there. We had Omicron, we had the Fed, but then we also had some supply-specific crude story too. So do you think we're snapping back to the highs?
I do think we'll see $100 next year, and one of the ways I'm playing it is, the CME group has done an amazing job over the years in giving clients or giving users the ability to trade micro contracts. You don't, listen, you don't need to be all in trading large contracts multiple times over. You can really layer in micro contracts. It's something that we do with our clients. Micro crude oil is one of the new launches this year, and it gives you the ability. You could buy 10 of those and layer in at your price very slowly, just like you would with an individual stock, and get to 10, which would be an even number equivalent to the large crude oil contract. So what we've instructed clients to do is layer in, as this thing was selling off, layer in into the mid 60s and, even at, up high as $70 and look to get a good average price, look for this thing to turn, and we've been using the March contract to do it. I think that overall policy in Washington is going to be a tailwind once we sort of get through this. They're aggressive on the headlines, and they're trying to, suppress prices and gas prices right now. But I don't think their policy is conducive for that over the longer or more, just intermediate term. So I think that when we get through this Omicron virus, one other outlier could be is we're seeing less severe mutations of the virus, and that could be a tailwind for oil or usage. You would see more travel. So I think there's going to be quite a bit of tailwinds through the early part of next year.
Okay, crude going to 100 next year. All right, we'll be looking for some cars on the road. They kind of petered off a little bit, but it was pretty jam-packed, the early commute this morning. So looking for some good virus news. I'm with you there as just being really kind of the potential to open up the door here again. Bill, thinking about where the other assets fit into some of the volatility lately, if that volatility also came from the Fed, what does that mean generally for risk assets? If crude can get this reflationary recovery story, what about stocks and Bitcoin on the risk camp? Are they going to like the reflation story if the Fed's going to be combating inflation?
Listen, it's a tough question here. What are we going to see in the meeting next week? And obviously, Powell took that hawkish turn, really surprised everybody, and he held ground. I mean, he did not edit what he was planning on saying, despite the developments from Friday and Monday. Are they going to hold that ground? Now, I always tend to look at a Jekyll and Hyde approach from the Fed. And right now, I think we got the more hawkish tone, and they can come in there. They can could probe the market's resolve against that hawkish tone. We saw the equity market sell off. I mean, even despite that, last Monday's news with the Moderna CEO came out, we saw some volatility overnight Monday into Tuesday. Remember, before Powell spoke in front of Congress, the market had almost really fully recovered. The NASDAQ was trading to new session highs. And it was his comments that sent tech sharply lower. So he's laid a bar out for how hawkish they can be. I don't think they exceed that bar. However, I do think they come off more hawkish than they did at the November meeting. How does the market digest that? I think we'll see continued volatility, but overall, I think the market will find a resolve higher, and I think risk assets will also resolve higher. I think the dollar over time is going to weaken, but if we don't really know how they're going to come out, and that's why. We're paring back positions. I think the rebound from last week was really the great trade. And if you're pressing things at these levels, then you're just being greedy.
All right. Nice. A little closing thought there. And a reminder how important next week will be. We're going to talk about that later on here on the show as well. Bill, thank you. Good stuff, sir. Good to have you here.
Thank you.
You got it. Bill Baruch, president at Blue Line Capital.